Meet crequityai, where real estate meets innovation through a REIT fund and an innovation fund, led by CEO and founder Rob Stewart. Explore crequityai and reach out to connect. Introducing a $2 billion tokenized AAA, AAA, securitized REIT, Real Estate Investment Trust, fund built for conservative accredited investors seeking predictable income. The portfolio pairs AAA securitized tokenized bond-backed exposure, designed to prioritize capital stability, with selectively curated real estate opportunities vetted by AI for risk, cash flow quality, and downside protection. The goal is steady, tax-efficient distributions supported by structured credit safeguards and disciplined property selection. Depending on structure and jurisdiction, investors may also benefit from potential state tax exemption and possible federal tax deferral or reduction. This innovation REIT fund overview highlights a structure designed for predictable, tax-efficient income. At the core is an AAA securitized, investment-grade municipal bond architecture intended to strengthen credit quality and stabilize distributions. Growth is supported by a $2 billion pipeline of projects screened by AI to prioritize resilient cash flow, manageable risk, and clear execution milestones. The fund targets a projected 5 to 8% yield that may be state tax exempt and federally tax deferred or reduced, depending on investor profile and jurisdiction. Real asset custody is tokenized using a CREC stablecoin for transparent settlement. For accredited investors, the value proposition centers on three outcomes: predictability, protection, and tax efficiency. First, the fund targets low volatility annual returns designed to be more stable than typical growth-oriented real estate exposure. Second, the AAA-rated structure is engineered to prioritize principal protection, using credit enhancement features intended to reduce downside sensitivity across cycles. Third, income may be tax-advantaged, potentially state tax-exempt, with possible federal tax deferral or reduction depending on your profile and jurisdiction. These elements are designed to align risk, return, and after-tax outcomes. This structure tokenizes real estate-backed cash flows using the CREC stablecoin, then places them inside a municipal bond-style securitization to elevate credit quality toward AAA equivalent protection. Instead of relying on a single asset or operator, investor security is reinforced through a protected bondholder architecture, clear covenants, defined payment waterfalls, and credit enhancement features designed to absorb stress. At the collateral level, senior C-PACE liens sit in first position and repay through non-accelerating assessments, supporting predictable collections and aiming to minimize or potentially eliminate principal loss risk. crequityai provides AI-driven equity analysis and investment research to evaluate stocks and market opportunities. It delivers decision support tools to help structure and compare equity insights. This investment-grade structure is built for capital preservation. At the asset level, senior C-PACE liens are designed to reduce principal loss risk by securing repayment through a priority claim tied to the property. At the security level, a protected bondholder structure establishes clear payment priority, covenants, and controls intended to support consistent cash flows. Finally, digital tokenization adds modern custody and transferability, paired with surety through over-collateralization, providing an additional buffer designed to guard investors against unexpected shortfalls or losses. This offering is designed for investors seeking tax-advantaged yield, targeting approximately 5 to 8% annual income while aiming to improve what you keep after taxes. A key differentiator is tax treatment. Distributions may include state tax-exempt income, and federal treatment may be tax-deferred or otherwise reduced depending on your situation and holding structure. Like any yield strategy, returns aren't only about income. Market value can move. Investors should expect potential unrealized gains or losses in the range of roughly plus or minus 10%. Commercial real estate owners are under growing pressure to cut operating costs, meet ESG expectations, and harden buildings against climate and grid risk. That's fueling demand for energy efficiency and resiliency upgrades, exactly where C-PACE financing fits. Across the United States, C-PACE programs have expanded quickly, creating a deeper pipeline of eligible retrofit projects and recapitalizations. Analysts estimate the C-PACE market could reach roughly $3.5 billion by 2026. Importantly, many municipalities actively support these improvements through enabling policies and program adoption, reinforcing durable, policy-backed growth. A quiet residential street with a row of houses, fences, and front bushes. The scene signals everyday housing stability and property-level fundamentals. Two forces are accelerating C-PACE financing growth. First, nationwide program expansion. More states and municipalities are authorizing PACE, widening the addressable market and creating repeatable local pipelines for energy and resilience upgrades. Second, AI and automation are modernizing underwriting, ingesting project data, standardizing credit and property checks, flagging anomalies, and accelerating approvals. The result is faster closings with stronger, more consistent risk controls. Together, broader eligibility plus tech-enabled underwriting increases origination capacity and supports scalable, securitization-ready deal flow. This fund model runs like a governed pipeline. Source real-world asset projects, then use AI to vet eligibility, risk signals, and data integrity before any capital is committed. Cleanfund.org anchors compliance, standardized disclosures, audit trails, and decision rights, so every approval is documented and repeatable. Approved deployments flow into municipally secured C-PACE assessments, benefiting from senior lien-like payment mechanics and public program oversight. Finally, blockchain smart contracts digitally secure positions, encode covenants, and track ownership, creating transparent custody and programmable servicing from origination through repayment. Compliance sets the requirements and policies for how the business operates. It ensures adherence to applicable rules and standards. For investors, the advantage starts with protection. The fund's assets are structured with senior municipal liens, designed to prioritize repayment and help defend principal across market cycles. Next is diversification. A broad ESG-aligned portfolio spreads exposure across projects and geographies, reducing reliance on any single property or sponsor. Finally, liquidity and stability matter. With predictable cash flow characteristics and disciplined risk controls, the strategy targets steady returns while offering pathways for liquidity so investors can balance flexibility with long-term income goals. This fund is built on a two-part partnership stack. crequityai brings AI-driven underwriting that screens projects faster, flags risk early, and standardizes compliance workflows and reporting. In parallel, CleanFund contributes seasoned C-PACE program administration plus municipal bond experience, critical for documentation, lean mechanics, and scalable securitization. The result is a repeatable operating system, better data at intake, tighter controls through closing, and clearer investor reporting after funding. Partnerships turn complex infrastructure into an auditable, execution-ready pipeline. You don't need the whole path. Take the first step and let momentum reveal the next. Choose courage and action, even when certainty isn't available. This offering is intended for accredited, conservative, ESG-focused investors. Next, schedule a briefing to review the offering. CR Equity is a brief reference to an equity-related account, product, or category. It may be labeled crequity.a. CR Equity AI investment offering is designed for investors seeking a secure, tax-advantaged path to participate in innovation without sacrificing stability. The strategy emphasizes disciplined structure, risk-aware governance, and a focus on sustainable, real-world outcomes, so capital can work toward both performance and positive impact. If you're evaluating ways to diversify with a solution built for resilience and thoughtful growth, this offering is a practical next step. Review the materials, confirm fit with your objectives, and connect with the team to proceed.